Well, hello, and welcome back to the Brittney Bundles podcast. This is our credit awareness segment where we talk everything credit. I'm really happy to be doing this segment. If you've been listening to this podcast for a while, you know that I come on here and I talk about different scenarios. I give advice, tips. There's been numerous interviews with different entrepreneurs on this platform, and the goal is to empower people through entrepreneurship. So I want to take a moment to thank you all for tuning in to those episodes. But I'm also going to ask that you start tuning in every other Sunday to the credit awareness segment as well. Again, we're going to be talking everything credit. Today I want to talk about a little bit of my background, but not too much. I'm going to do another segment on that. And also why I am interested in helping as many people as I can become credit conscious and aware of their goals credit wise and some of the barriers that they may not even know exist, and also some ways that they can overcome the challenges that they're facing. You'll be surprised how many people don't know where to start with their credit. There is so much information out there these days, and one person says one thing, another person says another thing. And if you know anything about me, you know I'm pretty much by the book, meaning that I like to do things the right way. I like to do things the ethical way. I like to make sure that I'm acting in integrity, and I like to make sure that everyone knows what it is they're getting themselves into, setting the right expectation. Those are very important key factors and values to me. So with that being said, I'm going to ask that you go ahead and share the podcast with everyone that you know. Let them know that every other Sunday we're going to be coming to the podcast with new credit awareness topics. Everything credit. So if you have a specific credit concern that you'd like to talk about, be sure to email me at the letter B, talks, TALKS, at yahoo.com. I'll be more than happy to review it and possibly make a whole segment dedicated to it. Also, I do offer a credit repair service. So if you are interested in repairing your credit, be sure to check out my services on my website, keepingupwithbrittney.com. That is keeping up, KEEPINGUP, with WITH, Brittney, BRITTNEY.com. Keepingupwithbrittney.com. Go to the first page. You'll see an option where you can click on the credit dispute inquiry button. That's going to lead you to the entire page filled with information regarding the credit repair service that I offer, and then you can book a free consultation. I do want to let you all know now, I'm not going to be taking an endless amount of new clients each month. So if you are interested, I would really encourage you to go ahead and check out the website now, set up the free consultation. That way I can get to you as soon as possible. So with that being said, I'm going to go ahead and give you all a moment to share the podcast, and I'll be right back in just a moment. All right, so we are back. And like I mentioned a moment ago, I want to share a little bit about my experience. So when I first started working, when I first got my feet wet through the door of working 9 to 5s, I really didn't know much about credit. I really didn't even want to learn about credit because in my mind frame, I was thinking if I can't afford it, I'm not going to finance it, unless it's a bigger purchase like a car or a home or something like that. And at that point, honestly, I wasn't even thinking about owning a home. I was really thinking about purchasing a car and making sure that I stay away from credit cards at all costs. Because growing up, I was told credit cards can hurt your credit. Credit cards can ruin your credit. And that is very true. But it also, if you use credit cards the right way, they can also have a positive impact and contribute to the overall positive health of your credit. And it's a great tool to help build credit as well if it's used correctly. So I got into the financial industry as a loan officer. Well, initially I was not a loan officer. I got hired into the credit union that I worked for. I was the first person in the position that they were hiring for. This was like a new position that they wanted to test out. And they had the expectation of hiring about 4 other people once I got in and I tested out the role. And I had my own hours, and I really enjoyed being able to kind of navigate this new role in the financial industry. And initially, I started doing outbound calls, and I started calling people and letting them know the benefits of coming to the credit union, asking those open-ended questions that I talk a lot about on the Brittney Bundles YouTube channel. and also on the Brittney Bundles podcast, the entrepreneurial side. And I used a lot of skills that I already had acquired from different positions and different experiences in the sales field. And it really worked well for me. At that point, when I say they, I'm referring to the credit union, offered another position. And it was the same position, but there were more tasks associated. One of the tasks fell under the title of a loan officer, a loan originator. And so I not only would call and try to get people to come over to the credit union, I would not only take a look and see what their APR was with current loans that they had, but I would also take a look and see what their plans for saving was, how much interest they were earning on their money. There were just a lot of different things that I would take a look at, but I really felt intrigued with the loan origination portion of my position because that gave me an opportunity to really learn credit reports. And it gave me an opportunity to not only learn credit reports, but learn some of the inside lingo and thinking processes that the lending institutions, I'm not going to say everyone has the same practices, but they're pretty similar lending practices and thinking processes that the loan originators and the underwriters go through before they approve or deny an application. And so firsthand, I was seeing applications, I was sending applications up to the underwriters with a recommendation for approval or denial, and I would start to see which applications would have a higher probability of getting approved versus the ones that would not get approved. And so some of the things that they looked for, I really, I started to hone in and I started to take a look at my credit profile, and I started to take a look to see how I would look on paper if I applied for one of these loans, right? What would they say if my name came across the board? Because they don't know me personally, but all they see is what my story tells in black and white. And with the credit union, it's different than a banking institution in the sense that there could be a little bit more gray in the approval or denial process. And then also a lot of times credit unions are known for looking at the relationship that you have with them as well. So how long you've been a member there and things like that. So that's a little bit about my experience. I've worked in the financial industry for 3 years. 3+ years actually. I did auto loans, I did credit card applications, signature loan applications for debt consolidations. I did lines of credit, home equity lines of credit, so the HELOCs. I have, like I said, experience actually working in that field. And so I know what the industry is looking for when they are, when we're discussing loan applications, okay? So I'm putting that out there just to assure you all that I'm not just talking just to be talking, but this is something that is personal to me, and this is something that I really studied. I actually had my NMLS number, and there's a lot of different practices, and there's studies and training that you have to go through in order to be able to excel in that position. And so today I'm going to be talking about ways that you can build your credit. We're going to start off here. And again, if you have any other podcast topics that you'd like me to go over, feel free to reach out to me via email. Again, that's btalks@yahoo.com. But the first point that I want to go over is a credit builder loan. So you may be wondering what a credit builder loan is. If you are interested in building your credit, or if you're looking at building your children's credit, I'm going to be talking about some of those other tips in another video. But one way that you can do that without taking out a credit card is looking into a credit builder loan, asking your financial institution if they offer that. And pretty much what that is it's a loan that you're paying on each month. When you pay on the loan, the institution is reporting to the credit bureaus. So if you're making on-time payments, that's going to have a positive impact on your credit report and your overall credit health. But you don't get the funds for it. So a lot of times when I would do credit builder loan applications, people would call in and they would say, hey, I want to do a credit builder loan for $1,000. And they would assume they were going to get the $1,000. A lot of people would. I would have to explain to people that this is not a loan where you're actually getting funds up front. This is not a loan where you are able to withdraw like a line of credit, but this is a credit builder loan where you are making payments each month while we're reporting your payment history to the credit bureau. And now there's different services that people have come out with that do essentially the same thing, where you make your monthly payments and they report to the credit bureau. So that is the first recommendation that I would list, and I'm not listing any in order as to significance, but that's the first option that I wanted to go over: credit builder loan. I think this is really good, especially if you don't trust yourself with not being able to resist the temptation that comes along with having a credit card. This would be something that you could look at in substitution for that. Also, if you're looking at getting a loan with that institution, let's say you're with a credit union and eventually you want to get an auto loan through them, starting off with having your accounts with them and then doing a credit builder loan and then maybe advancing to a credit card and so on and so forth will give you a better chance of getting approved when you do apply for that auto loan, or when you do submit your application and apply for additional credit. The next thing that I want to go over is become an authorized user. So if you become an authorized user on someone's credit card, that's another way that you can build your credit too, and a lot of people don't know that. Now, if you are getting added to someone's credit card and they don't have good payment history, this can negatively impact you as well. So you only want to be added to people that you know are responsible. If someone adds me as an authorized user and they have poor payment history, that can damage my credit as well before I'm even before I even get an option to get a credit card in my own name. But if someone has positive payment history, you can go ahead and add them on as an authorized user, and that would help build their credit. It shows on-time payments as well because they're associated with your card. So this is something that a lot of parents do. They'll have their children added on as an authorized user. They'll make on-time payments and help build their children's credit while their children are maybe in college or right after they get out of high school, or some even while they're in high school. So I would look at that as well. The next thing that I want to go over is a line of credit. So if you are interested in building your credit, another way that you can do that is by obtaining a line of credit. Now, typically the lines of credit with financial institutions are going to be in anywhere between a line of $500 to $1,000 starting off. More so on the $1,000 side. And with that being said, because it's an unsecured type of credit line, meaning that there's nothing to secure with. If you don't pay, then the institution is taking a loss on those funds. If you use them on, don't pay them back. Whereas if the application is secure, like with collateral, a vehicle, a home, a boat, if you don't pay, if you default on the payments, they're able to collect that piece of collateral and resell it in hopes of getting their money back. And then, you're still responsible for the amount that is owed on the loan after they sell the collateral at auction. So a line of credit, with that being said, can be a little bit more challenging to obtain if you don't have any credit starting off. So this is not a way that I would initially start off recommending that you go down if you don't have any credit, just automatically going for the line of credit, because like I mentioned, it is a higher risk to the financial institution, but it's also not as large of a risk as like maybe a $5,000 credit card or a line of credit for $20,000. So not saying that you wouldn't be approved on your first round. It all depends on your overall credit health, your debt to income, how stable you look on paper, how long you've been at a certain residence, how long you've been at your certain employer, and things like that. However, this is another way that you can build your credit if you get approved. If you take out a line of credit, you're being responsible with it. You're not taking everything out at once. You're still making your monthly payments. You're not skipping out on any payments. If you do that, then that can help build your credit as well. Pretty much when you are thinking about credit, think about how you look just on paper, how your track history looks, without anyone knowing your story, without anyone knowing what you look like, without anyone knowing what you're planning to do. Now, the institutions typically will ask what you're planning to do with the funds. They will ask about your history a lot of times, but this is how I keep myself on track, by just assuming that no one's worried about my story, no one's worried about what happened, no one's worried about anything like that. They're looking strictly at the paper, because some people will strictly look at the numbers, and they're looking at how long I've been at my residence, how long I've been in business. They're looking at how stable I am overall. Am I revolving high balances on my credit cards or lines of credit? Did I take out the line of credit immediately and decide not to pay it back? Have I paid off my auto loans? How did my mortgage payment look? Things like that, okay? The next thing that I would recommend doing is getting a credit card, but a secured credit card. A secured credit card is going to be a lot easier than getting an unsecured line of credit or an unsecured credit card. When I first started building my credit, I did get a secured credit card through Capital One. I literally went to the website, I applied for my credit card. I was super excited that I was approved. I really didn't know the differences between secured credit cards and unsecured credit cards. And really, one of the biggest differences is the fact that with a secured credit card, you're securing that card with your money up front. So with a secured card, I believe I needed to pay $200, and that $200 was put on the credit card for my credit limit. And so my responsibility was to keep my credit limit below 30% of the credit balance, which was 200, and then make sure that I'm making my payments every month on time. And eventually over time, that credit limit increased. And eventually it increased, and then I was able to apply for different credit cards with higher credit limits that weren't secured. So that is another way. I've personally used that way to build my credit. That's a way that you can build your credit without worrying about getting approved, because even for like a credit builder loan, you still have to be approved for it. Mostly everyone that I did an application for the credit builder loan was approved, but there were some people that were declined. Sometimes they were declined because they didn't have stable employment. They were maybe employed through a temp agency, or they had a seasonal position that was about to end. So it depends on the financial institution and what their guidelines are. But there were some credit builder loans that did not get approved. Also, the debt to income. If the debt to income was too out of guidelines, if the ratios were too high, then that's another reason that the credit builder loan would not be approved. Another way to build your credit is through an auto loan. So once I did the credit card, the secured credit card through Capital One, I also obtained an auto loan. There are some people that have been told, don't get auto loans, just buy your cars outright. And I'm not going to tell you whether you should, whatever you want to do is what you can do. But these are some ways that you can build your credit. I can say that getting an auto loan and using that as a tool to build your credit definitely can work in your benefit. For example, if you take out an auto loan and if you're making those on-time payments, it's going to be able to show responsibility on that black and white paper when you go to apply for a loan application. Also, the credit bureaus are going to be able to see, okay, she's responsible enough to make her on-time payments each month. Now, I would recommend not paying off your loan sooner than the loan is the loan duration, because I did that and it didn't have a positive impact on my credit report. I got the vehicle and I paid it off within 6 months, and I'm thinking that it's going to show a lot of responsibility, and I'm thinking it's going to boost my credit score out the roof, and it didn't. And I was really interested in knowing why, hey, why didn't this auto loan increase my credit like I was told it would or it should? And they advised, well, hey, you didn't make enough payments. You paid, under 6 payments, and then you paid off the vehicle. So although it saved you interest, because interest typically accrues daily on auto loans, right? It saved me interest, but it took away that opportunity that I had to build my credit. So those are some ways that you can build credit. Any questions in regards to this topic, be sure to reach out to me via email at btalks@yahoo.com. You can also leave a comment or a DM on our Instagram page, which is Brittney Bundles_podcast. I want to thank you all for tuning in. And if you'd like to be a guest on the podcast, send me an email. Go to the Instagram, Brittney Bundles_podcast. Be sure to check out the credit repair service at keepingupwithbrittney.com. And I will talk to you all in the next episode. Bye.